Morning everyone, my name is Sakiba Ryan, resident oil trader here at JNF Capital. The date today is Tuesday, 7th April 2015. I'll be giving you an insight into the movements in crude oil at the moment, key bullish and bearish factors. Before I get started, please note that investing in the financial markets is not for everyone, as losses can exceed deposits. So as you know, markets are made up of buyers and sellers, bulls and bears. What I try to do as a professional trader is basically align myself with the entity that is in control of the market. So let's try and have a look and see what the bulls and the bears are up to. So, let's start with the bears. What are the bears looking at potentially? Most important thing for us to look at is the inventories. The inventories last week, we had another build of about 3.8 million barrels down in Cushing, Oklahoma. This is very significant because it's basically the 12th straight week of builds and inventories. Now, the reason this is significant is because not only is it a build in succession, however, if we look at the maximum capacity that Cushing, Oklahoma has, it's about 70 million barrels, okay? We're already reaching about the 80% mark, if not more than that. So the situation as it stands is, if we do not start seeing draws coming from the refineries soon, we don't see that draw at the delivery point of the futures contract, we will have a massive problem on our hands as far as supply is concerned, because the fact of the matter remains is that if Cushing reaches its maximum capacity, then we're looking at floating storage. And this will have a majorly negative impact on crude oil prices. Now, for those of you who've been watching the news, you will know that the talks in Lausanne, Switzerland, they went pretty well between Iran and the United States, and other countries as well, but it was mainly Iran and the United States. They made headway. Now, the final draft of their agreement is to be prepared and signed off by end of June, but it seems that we are making some sort of progress here as far as Iran is concerned and their nuclear program is concerned. Now, how does this impact oil prices? Well, the fact of the matter remains is that Iran is the third biggest oil producing nation, okay? Now, amongst its peers, okay? So they have their current capacity somewhere in the region of about 4 million barrels, okay? Currently they produce roughly around 2.6 million barrels. Now, if these sanctions are lifted from Iran, we will obviously see that supply glut that we currently have added to by the Iranians, and that will obviously be negative for prices because we're already awash with oil from non-OPEC members and OPEC members alike. So, but one of the things that we do have to consider is that Iran already has 30 million barrels in storage. This obviously will come onto the market straight away. The main consistent production from Iran is not really expected to come online really before the end of 2016. Unfortunately, it's not just a switch on, switch off button. If a refinery is shut down, there is a lengthy process to get it up operational again. So all they will not technically, we do not anticipate them reaching maximum production capacity before the end of 2016. So although this is bearish information for the market, the question is, when does it actually impact the price of crude oil? And the way we see it, it may not impact the price of oil immediately. Another bearish factor that we're having a look at is the dollar. The dollar has been sideways for a couple of days. Now it seems to be looking to try and resume its bullish position. If this is something that the dollar can do, resume its bullish trend, as you know, commodities priced in dollars like the US oil that we trade, it will be significantly bearish for the commodity, as there is an inverse correlation in place. So these are the three major factors that the bears are keeping an eye on, which we believe so anyway. The inventories, the talks that happened with Iran, how they played out. Another thing is, when is that oil coming on board, and of course the US dollar. Okay, so what are the bulls up to? Interesting times. So we do have a bearish argument, yes, but the bullish argument seems to be very strong as well now, which, for me, it is indicative of a potential bottom being carved out, but, time will tell. Now, something that's been very significant that's been going on is, for anyone who's been watching the news, we will know that Saudi Arabia attacked Yemen, some time back. This is quite significant. I'm going to try and explain why. Now, basically, a 10-state coalition that attacked Yemen was a significant move. This is, as you know, Saudi just generally does not attack anyone. They have like $90 billion worth of, defense equipment, but they don't really use it. How is this going to impact oil prices? Now, Yemen, as you know, is situated below, to the south of Saudi Arabia. What generally we have here is the UAE to the right of Yemen, Yemen below Saudi Arabia, and what we have is 17 million barrels that generally leave the Persian Gulf, moving downwards and out towards Asia and the like. Part of that oil that comes out of the Persian Gulf makes its way up through the Gulf of Aden, up towards the Suez Canal, and towards Europe and this side of, to the western side of the world, okay? Now, if the Gulf of Aden, which is primarily controlled by Somalia and Yemen, okay? If this little narrow passageway, for whatever reason, there is some sort of disruption to that trade route, this, of course, is going to have a major impact on oil prices. Okay, now the question is, what is the potential of this happening? Okay, it's not very high because the rebels would need significant equipment to get there. But the question also arises is that why is this happening? Okay, what's going on in Yemen is effectively a proxy war between Saudi Arabia and Iran. The Iranian-backed Shia rebels ousted the existing president of Yemen, who was a Sunni president. Now, of course, Saudi Arabians being Sunni, don't want an Iranian stronghold right at the base of their country, which is in Yemen. So naturally, it seems that they have attacked the rebels in support of the president, more so to reduce the threat that is, posed by these rebels who are apparently, Iran-backed. So, if they are appropriately supplied with equipment, then they shouldn't really have a problem disrupting, the normal trade routes through the Gulf of Aden. So I guess time will tell about that. But until then, traders are very edgy. They don't know what's going on, and when they don't know what's going on, you will find that people who have been short will book profits. That causes the market to rally a little bit. Okay, and generally you'll have eager traders who want to benefit on the back of geopolitical tension, and will try and go long at the same time. This, as you may have noticed, has supported oil prices of late. It is looking fairly bullish from where it stands. Another thing that I'm looking at is the oil refineries. Okay, oil refineries have been shut down of late due to maintenance season. Okay, now when that happens, generally we have a supply build. A lot of builds in crude oil inventories can take place. Now when the inventories come back online, we do expect that supply glut to reduce. So what we need to see is if this actually happens. If the refineries start coming back online, the US refineries, and there's still builds in in stock, we generally have a serious problem on our hands. Okay. Now, if you look into it a little bit, we are expecting to be some sort of a draw, because some study shows that on average American drivers are driving a few miles more than they usually do over every quarter. So that is bullish for oil prices, because it just shows generally that there will be a higher demand for gasoline. So that's where we stand right now. The main thing that we're looking at, watching very carefully, is the Saudi Arabia-Yemen situation, the whole proxy war with Iran, and if and when there will be any disruption to the Gulf of Aden, oil refineries coming back online. So that's the bullish view for now. So basically, how will I be trading this in terms of levels? As you know, I give out my levels on my own report, the exact levels as to where to go long, where I'll be going short, and even where my targets are for the week. If you are interested in trading crude oil, you would like to know where I am trading oil from, where the levels are, the long points and the short points. Please get in touch using my details on the following screen. Alternatively, you can follow me on Twitter as well. My Twitter handle is @OrionOil. I do share significant updates when they happen with my followers and the market generally on Twitter. And occasionally, once in a while, I do give away my trading levels as well. Just to give you a feel for how I trade, and sometimes I share my trade ticket and screenshots as well. So that's been all for me for this week. I look forward to joining yourself next week. I wish you a profitable trading week, and see you next week. Thanks.